Ever wondered how you could leverage open banking to start your own fintech company? Today, we're going to take you through a step-by-step guide on how to do just that. We'll discuss the importance of understanding the concept of open banking, the technical foundations like APIs, which are the building blocks of this innovation, OAuth 2.0, the backbone that ensures secure authorization, and the vital role of data encryption in maintaining the integrity and confidentiality of the user data. We'll also sprinkle in some examples of how big companies started their business and used open banking to their advantage. So, buckle up as we embark on this journey of financial entrepreneurship. So, what exactly is open banking? Open banking, a finance term, is deeply rooted in the utilization of open APIs, which are essentially sets of rules that allow different software applications to interact with each other. Take the example of Plaid, a successful fintech company. Plaid built its business around the concept of open banking by providing a platform that connects various financial applications with users' bank accounts. Next, let's talk about how you can leverage open banking to create your own fintech startup. The first step is to identify a problem or a gap in the market that your fintech company can address. For instance, the founders of Revolut noticed the high fees and inconvenience associated with international money transfers and decided to solve this issue through their platform. Once you've identified your niche, the next step is to understand the technical aspects of open banking. This involves familiarizing yourself with APIs and how you can use them to access and share financial data securely. It's also essential to understand security protocols like OAuth 2.0 and data encryption methods to ensure the safety of user data. Take the example of Monzo, a digital bank that leverages open banking to provide a seamless and secure banking experience to its users. After this, you'll need to develop a prototype or a minimum viable product, or MVP, for your fintech solution. This is a simplified version of your product that has enough features to satisfy early customers and provide feedback for future product development. For example, TransferWise started with a simple platform for peer-to-peer international money transfers before gradually adding more features based on user feedback and needs. Next, you need to ensure compliance with financial regulations. This involves obtaining necessary licenses and ensuring that your solution adheres to data protection and privacy laws. For instance, Adyen, a payment services provider, had to comply with various financial regulations in different countries to operate its business. Finally, once you have everything in place, it's time to launch your fintech startup. Remember, success doesn't happen overnight. Companies like Square and Ant Group didn't become giants in a day. They continuously innovated, adapted to market changes, and most importantly, kept their customers' needs at the forefront. In conclusion, starting a fintech company leveraging open banking involves understanding the concept, identifying a market need, grasping the technical aspects, developing an MVP, ensuring regulatory compliance, and finally, launching your startup. With persistence, innovation, and a customer-centric approach, your fintech startup can also make a significant impact in the financial ecosystem, just like the giants we discussed today.